Lots and lots of apartment supply hitting the urban core in Boston. What effect is that having on the local apartment market? Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Beantown update. Unlike most markets in the Northeast, Boston has enjoyed a strong pace of job growth. In fact, the Beantown Metro is seeing its best job growth since 2001, with a nice chunk of these jobs being higher paid positions. The biggest headwind, though, has been supply. Apartment construction, as you can see, has been at the highest levels that we've seen for Boston in decades, topping the previous peak seen in 2006, and sustaining construction of around 11,000 units consistently now for 2 straight years. A lot of these units are concentrated inside the urban core, and we'll talk about that more in a bit. The good news is, though, that overall apartment demand has been brisk, and you could thank again that good job growth pace for that. Boston added nearly 7,000 new apartments in the past year, yet demand was even greater, so occupancy ticked up 40 basis points to 96.7%, very healthy and right in line with Boston's 4-year average. Rent growth, meanwhile, you can see rent growth has been solid, but it remains below the pace that we saw earlier in this cycle. Same-store rents for new leases increased 3.5% year over year as of Q1. That's below the U.S. average of 4.6% and by a pretty good margin. And this continues a pattern for Boston. Considered one of the so-called Sexy Six markets, Boston was a strong outperformer relative to the U.S. averages earlier in this cycle, but has been tracking at or below the norms for most of the last 2 years. So let's talk about the Boston urban core. Here's the rent growth pattern. You can see that big rent growth in 2010 and 2011. That's what really drove up those overall metro numbers we saw earlier. And this is for the in-town Boston submarket. And from there, though, you can see after 2011, it's become a lot more volatile, and that traces to all the supply and the construction that's been occurring. Averaging rent growth right around 2% year over year for the last 10 quarters. And we have seen some better numbers of late, 4.1% year over year growth as of Q1. But property by property, the results remain very volatile, and it wouldn't be surprising to see those numbers bounce around further. Now that takes us back to the construction story. Here are the top 5 submarkets for ongoing apartment construction in Metro Boston as of Q1. You can see more than 4,500 units underway just in-town Boston. That's more than 40% of the Metro's overall total, and nearly 10% inventory expansion for the in-town Boston submarket, which is a big number, especially when you consider the fact that a lot of the in-town Boston apartment supply traces back to prior to 1980 and really prior to 1970. And so in terms of newer product for Boston, this is really an unprecedented expansion, and it's clearly having an effect on rent growth patterns. And so with that construction speed continuing, we think volatility will continue to play out in the fundamentals inside the urban core. Now, elsewhere in the metro, we see stability, solid, consistent results, but it's really the urban core in town plus the Cambridge-Somerville area that tends to drive the metro's performance in good times and really gets those rent growth numbers higher. The rest of the metro just doesn't see as much upside generally. So we expect the overall Boston metro to remain a solid performer with rent growth in the 3.5% range in 2015 and likely going forward until we see construction slow down inside the urban core. And that's going to wrap us up for Boston. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thanks for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.